Hi, and welcome to the December 2017 Northwest Market Update. Are you ready for the most unusual December ever? Well, this December you will see a slowdown in transaction volumes, but you will still see bidding wars, escalator clauses, and all of the craziness that's been going on all year long. Let's dive into the numbers, shall we? As you know from my video in November, the inventory levels for King County and the surrounding areas still remained at or below 1 month of inventory, 0.98 months of inventory in King County specifically for the month of October. Well, in November, it didn't get any better. King County fell to just 0.79 months of inventory, with Snohomish County being only slightly better at 0.89 months of inventory. And we saw double-digit declines in inventory compared to the year prior in every county that our MLS serves. In fact, the average across all 23 counties was 15.9% decline. The highest decline was twice that at 31% in Thurston County, which is one of the counties that is just south of Pierce County and just on the outskirts of the Seattle metropolitan statistical area. Now, inventory is dwindling, but the rate at which new inventory is coming on the market is still on the rise. I believe this is due to many of the forces that we discussed in my last video, which basically revolve around that fear that sellers have that the Fed will interfere with interest rates, thus making it harder for buyers in 2018. So sellers are moving to put their homes on the market sooner, trying to avoid that. New listings rose last month by nearly 5.6% compared to the same month a year ago. The number of homes going into escrow, however, rose, albeit slightly, at 1.6%. This is why inventory is still remaining tight. In a recent article published in Housing Wire magazine entitled "Here Are 6 Predictions to Know for 2018, the author cited that there were 6 primary reasons that inventory would rise in 2018. Number 1, home appreciation. It's expected to cool to 3.2% next year. Number 2, mortgage rates. They're expected to rise an average 4.6% throughout the year and could reach as high as 5% by the end of the year. Number 3, existing home sales. Existing home sales are forecasted to rise to 0.5% as the trend in low inventory begins to reverse course. Number 4, housing starts. Even as existing home sales increase, new home sales will increase even more and could go as high as 7%. So those new home starts will drive new home sales. Number 5, at the same rate as housing starts, new home sales will rise 7% year over year in 2018. And lastly, number 6, home ownership rate, which will finally stabilize at 63.9% after having hit bottom in the second quarter of 2016, this as forecasted by NAR economists. So what does all this mean? It means that if you're thinking about selling, sooner is better than later. Later, interest rates will be higher, competition will be higher, and buyers will have more leverage than they have today. If you're thinking about buying, you can look forward to sunnier days in 2018. Inventory will still be low, but it will be higher than it has been for the past couple of years. So you will still have to be aggressive, just not stupidly aggressive like some buyers had to be in 2017. As a seller, be smart and price your home well. It will pay off. If you're thinking about buying, you can just go to my website, realestateanswers.guru, to get priority access to homes before we put them on the MLS or the internet. If you're thinking about selling and want to learn about exactly what to do to get your home ready for sale, and more importantly, what not to do, you can also go there and request a free copy of my book, What Every Person Needs to Know About Selling a House. Have other questions for me? Well, comment, like, and subscribe below. You can also follow me on Twitter at @EdLaineAgent or Instagram at Mr. Ed Laine. This is Ed Laine signing off, so make it a great day.